and welcome to the Investing Master Series. My name is James Boyd. Today's date, July 14th. We welcome all of you here today. We also got with us, so let's first give Scott a little credit. Let's say he's in Hawaii somewhere, right? Aloha back to you. And that's called Mr. Commitment right there. Olga, welcome. Kevin, welcome to you. Will, Tech One Trades GT or Gary Taylor. And also Sharon. Also, we have with us Chris B, Hannah. Boy, that was pretty nice on Wimbledon, wasn't it? And also Heather and others. Welcome to all. Now, just real quick, we got with us Barbara Armstrong with us in the chat. She is known as Mrs. Fleeg. Okay, so we welcome her here as well. All right, now as we get started, remember that this session is broadcast via YouTube, and if you went to YouTube, you can just type in Trader Talk Schwab Coaching Webcast. You do not have to be sitting on a computer. It could be on a phone or an iPad, whatever. And that way you could actually see where we post previous classes. You'll see there's a playlist there. So you could actually go to, let's say, a playlist of a certain class, like Uncovered Calls, Investor Master Series, and so on, and actually see the previous classes taught there as well. So, and also don't forget the search feature. If you have anything you're trying to really learn about, as you subscribe for free, you can click on that search and it's going to comb through previous classes that were taught on our channel. Now, just real quick also, as we get going, remember that this class, so let me give you two links. First off, this one right there that I just mentioned. Second one, the playlist for this class, you're going to see, let me actually send this playlist to you, is right there, okay? And make sure that you bookmark those. Now, last week we talked about long calls and cash secured puts, and you could see previous classes that we actually taught and scroll down. So think of this like your favorite TV show, and these are previous episodes. Same idea, okay? Now, with each class, there is a playlist. Now, as we get going actually here, remember that with what we discuss here today, we'll talk about stocks and options. Remember that options are not suitable for all investors. Different options have different defined risk, max loss, so and so on. Be aware of what those are. See if that's something you would consider for yourself. Now, this class we talk about stocks, okay? If you're interested in any ETFs, Brent Morse teaches the class on Monday afternoon on ETFs. I'll be actually teaching on Friday morning at 9:30 a.m. Eastern. Kevin is out, so I'll be riding solo. And so I'll be sharing my screen and those showing the watch list that we actually cover there and why. Now, in our examples, remember that the information I talk about is done for general informational purposes only. When we talk about examples, we will do those on the Paper Money software platform for educational purposes. When we talk about investing, remember it involves risk. And with that said, short options can be assigned prior to expiration, especially since we're talking about American style options. Okay. And today, what we want to kind of talk about is some interesting market conditions here to start. Want to kind of bring up sectors for just a moment, look at market sentiment, and then we're going to be talking about past examples. We got expiration day coming up on Friday. We need to talk about some examples because we have many examples that are expiring in 3 days. So we're going to talk about closing or rolling positions, but also establishing new positions. Let's go ahead and let's just dive in. Now, first thing what I want to do is let's kind of just pull up the VIX, okay? Think of the VIX kind of like the waves on the lake. How high are the waves on the lake? How high are the waves on the ocean and so on? What you're really going to see is if we're talking about the volatility for the S&P 500, not very high right now, okay? Now, this does not mean that everything is actually doing this, right? Some stocks could be going down, some are up. But the volatility, we haven't had a whole lot of volatility lately, okay? If there was a spike, it came right back down. If we talk about crude oil itself, as we've been watching this, crude oil did go over 80. Again, this kind of affects some of the components, right? Maybe energy sector, some of the gas trades, oil trades, airlines, hotels, restaurants, and so on. We'll pull up to airline stocks in just a moment, but that's continued to go up, at least so far, as we actually talked about that yesterday. Overnight did go over 80. Now, the other thing is if you take a look at, let's say, the rates, Fed's Walsh speaking prior or current, and you're going to see that rate actually hit over 4.6. Keep an eye on that, okay? Can affect some valuation, can affect some sectors more than others. But what you're now going to kind of notice is the Fed's Walsh did mention, now he said, let's see if he can do it. The inflation is going to be the thing of the past. Well, okay. I mean, let's see how it really plays out, right? Now, overall, if we brought up the US dollar, you're going to see that bounced a little bit in the last 2 days, but came down here today. So when we look at the sentiment gauge, right, we look at oil, yeah, it's gone up a little bit, still not crashing to the upside. You got rates 4.6%. I mean, high, okay, higher. Let's asterisk that one. VIX, not a whole lot of action. US dollar near the high, but not crashing to some highs. Okay. Probably the worst thing of the thing we're actually seeing is maybe the rates itself. Okay. So we don't see anything alarming in terms of sentiment. Okay. At least not right now. Now, if we're talking about, let's say, the markets, we bring up the NASDAQ. NASDAQ has been in this eternal symmetrical triangle pattern. Will someone please wake us up when this breaks out? Okay, speaking of that, let's move on. The semis, what you're now going to notice is that's had a crossover, but not materialize, at least as far as the group. The one thing that we need to make mention of is IBM this morning did give preliminary numbers in terms of their earnings. They made mention of that their earnings was had kind of had slowed, and that actually businesses were actually looking for hardware and also memory chips. Now, this is kind of what people had feared, right? Software, maybe with AI, maybe starting to lack demand. This has been really probably the largest business that's really came out and actually had a big drop. This is not even earnings. This is the preliminary, okay, findings on earnings. And you're seeing that investors are just reacting, well, tough. Do you guys know who was talking about this on Monday morning? Well, on TV. Just give you a hint, okay? First initial J, last initial C, okay? Talked about this quite heavily. Boy, adverse reaction, okay? To say the least. Now, if we pull up, let's say the SPX, what's happening here? SPX is kind of grinding away. Now remember, this is top heavy, actually, the tech sector, but overall, even with the tech dragging the S&P down, still holding. If we actually take that top heaviness out from tech, the equal weighted index, not a brand new high, but still holding up near the high. And if you actually look at, let's say, the Russell and the Dow Jones, Russell kind of still holding the old breakout level, would like to see a stronger bounce, not yet. And if you look at let's say the Dow Jones, there it is. So not every day is going to be a brand new high. I know, I'm as sad as you are. But overall, kind of still holding up. If we look at these on the 3-year weekly chart, this is what we have on the weekly chart, okay? Now, again, we would like to see some separation on the moving averages where the momentum is quite strong. We don't really see that. We're kind of floating to the upside, okay, grinding. When we have the separation in the moving averages like this is where you get the big moves. Those big moves tend to happen off lows, okay? So when those moving averages narrow, it doesn't mean that there's not a trend, but it's actually slowing and grinding to the upside. Now, the biggest actually thing is, let's kind of talk about these sectors. If we take a look at the IXM, now I'm not a fan of this ticker symbol myself. I think it maybe doesn't completely look like what we talked about on Friday. Feel free to look at what we talked about on Friday in terms of this sector. The financial sector did actually hit a brand new high here today. Many stocks in there did get a push. We'll talk about that. Now, remember yesterday when we actually drew up kind of high beta, mid beta, low beta, or we could say high volatility, growth, medium volatility, maybe GARP, growth at a reasonable price or value, and then income, right? Lower volatility. This is kind of more in the mid category, okay? Now, the other area that we're going to keep an eye on is actually utilities has actually looked like it's tried to get a little run here. The IXE, the energy, has tried to get a push. Soft so far today. This is not completely unusual. Better move yesterday. Today, actually kind of in the middle of yesterday's candle or near it. You know where we're going with that, okay? Some people try to buy on that dip intraday price action. And the last one, again, feel free to use the different ticker symbol. we have to use the index since this is not ETF class, but $ DJT for the transports. Those transports, namely the rails, they've actually held up pretty strong, and we'll look at the airlines in just a moment. So overall, if we kind of fast fire through just a couple Dow stocks, what financials? Well, stocks like Goldman Sachs, stocks like JPM, stocks like, for example, AXP, uh, getting a pretty decent move. What I mean, these are all just in the Dow Jones. Don't have to search. They're right in the list of 30. If you look at, let's say, UNH still grinding, not to a brand new high, earnings upcoming. We're going to keep an eye on that. What about stocks like V? Okay, Coca-Cola. Okay, what about TRV, another financial? And you're going to see that these are kind of still grinding and flagging away. What about stocks like Cisco? Okay, these are all names right here where these are just in the Dow. If you're not looking at these on a daily basis, you're kind of missing the point. Uh, Large caps, probably widely held, okay, and many investors probably have some pretty big positions on these, okay. Now, first off, I want to kind of just see before we look at some examples. Now, Ricebird actually says several double beats with banks today. Okay, and we'll talk about some of those banks in just a moment. But what I want to do is I want to come back just real quick to the paper money account, pull this up, and I want to kind of look and just see what's in the paper money account, just kind of what do we have, okay? Now, first off, we have shares of Apple. Don't really need to do a whole lot there. We're kind of playing a potential horizontal breakout. We do see the whole moving average went down for a day, noted, okay? Trend is 4, which means we're up near that area of resistance. Hence why I kind of said it's trying to still break itself out. It did break out yesterday to an intraday high, but overall, you actually see that yesterday we kind of came back down and closed lower, okay, or slightly higher yesterday, maybe a point. Still riding that. Now, AXP, the shares, 15 shares, trend 3. This is what the investor is saying. Yeah, give me more of this, okay? Trend 3, whole moving averages in the last 2 days, both green. So riding that trend there, shares there. John Deere, down, trend 1. That's not great. They had a ruling, went against them to some degree. You know how rulings are. It's not necessarily over until it's over. But overall, we're down on that position. If we take a look at Dell, if you want volatility, right here, okay? Dell, $400 on 12 shares. Got it back, got the loss back, and some more, okay, on Dell. We'll look at that in just a sec. Coca-Cola, though, sitting here with a long call. Now, let's talk about this just real quick, okay? If we have a situation where you have a long call, which is the right to buy the shares at the strike price. So let me ask you a question here, okay? Do we just want to play the option itself? Or do you want to actually say, use that call for the right to buy the shares? Let's pull up Coca-Cola just real quick. And if we pull up Coca-Cola, you tell me, would you say, you know what, you want the shares or you don't want the shares? Thoughts on that? Now, what I'm going to do in this case is if we decided, you know what, I want these shares. Maybe it has an upcoming dividend. It doesn't. The dividend was actually about a month ago, okay? There's upcoming earnings, but if the investor says, look, I want to kind of have a stock that's in the staple space, that's upward trending, and they want to actually use that long call to exercise their right to buy 100 shares, how do you do that? Well, now, by the way, we're down $95. Bought the call at 251. It's at 158. Probably not lights out, but here it is. ITM, which means it's in the money. What does that mean? The current stock price is above the strike price. There's some intrinsic value. If we let it close above the 82.5, what should happen or could happen? Well, if we didn't do anything, that long call would morph into 100 shares of stock. But could we exercise before expiration? Well, this is an American style option. We're going to right click on this. And what we're going to do is we're going to get out of the option, take that 93-cent loss, exercise that. And now what we're going to do is if we exercise it, what does it do? Well, we're selling the call that we actually have and then buying the shares. Okay. So why would you do this? You're saying, I want the shares. I don't want to just trade the option price. I want the underlying shares. If we did that, if we went confirm and send, notice what we need to exercise 100 shares at 82 and a half. And now you're going to see that we're going to send the order. Okay. Now that position, if we go back to this, you're now going to see that it has a buy right there on that stock row right there. We don't have that position yet. And now it's trying to go out there and fill. Okay. So have you ever actually had a long call? So now we actually see the call is gone and there's the 100 shares of stock. All we had to do is right click on that and just say exercise. Okay. The long call morphs into shares. Okay. We can see that there. Now, the one that we have to feel a little bit bad on, or that we mistraded or managed, was, let's say, Love and maybe Ryanair. Why do I say that? Well, when you look at Love, this has been something for the last, number one, trend 5. So what does that tell us? Prices below the shorter term moving average. We're losing momentum. We could also see confirmation of that by looking at the moving average. The 10-period moving average has been red for 9 trading days. So what does this probably tell us? Well, if we owned 100 shares of stock, that actually means that every dollar the stock was going down, we're giving back $100. Okay. Now, if we had 100 shares and we're watching oil go up, that probably means that some of these airlines could be hurt a little bit. Okay. Now let's pull up Love and kind of show what we mean. Now, the current profit loss on Love now is about $450. But a couple of days ago, when these moving averages went, let's say, red, we're probably about right there. Now, I'm not going to beat myself up, but that price as of there when the moving average were both red was $50.20. Now, we're at $47.60. Now, if you had 100 shares of stock, what might you be thinking if you wanted to have some exposure still to the airlines or transports, and you had 100 shares of stock? Well, many investors actually might be thinking, you know what? Could you sell a call? You got the shares, sell a call. Now remember, what we got to be thinking about with that cover, with the shares itself, if we have the shares, we can sell a call. Try to double check the liquidity. Now remember, if we have the shares, you sell the call, you're legging into a covered call, meaning you have the shares already. Now what we're trying to do is take the 100 delta that we have there, and if the price is pulling back, we're trying to reduce that. Well, how do you reduce that? What's a way? Option number 1, sell some shares. Option number 2, sell a call. Option 3, buy a put. Option 4, collar the position. Okay. Of those three of the 4 that I made mention of, selling the call, buying the put, collar's the most defensive. Okay. Probably even say with that, selling some shares. But if the investor said, look, I want to keep the shares, but I want to sell a call. Now let's go double check. Could we? Well, on this right here, what you're now going to notice is the August expiration. Okay. We're looking at 20 to 50 days to expiration. Monthly options. Here we are in the August. We're going to go look down at, let's say, something, a strike that has a delta of, let's say, 30 to 40. Now, again, that's telling us the profit loss, approximately if the stock on the option, the stock goes up or down $1. It's also telling us the probability the stock would be above that strike by a penny at expiration. Now, if you take a look at this, if we sold the 50, okay, let's go back and see where we bought it at. Well, we bought the shares at 43. So we bought those shares at 43. Could we sell the 50? Could there still be some upside? There could. Now, remember, is when you sell that 50, you're also thinking of how much money is that? Well, if we got, let's say we got $2, okay? It's $1.99. If we got $2 and we paid $43.63 for it, it's really an ROR, return on risk, of about 4.5% of what we paid for the stock. That percentage is high, okay? It's because we bought the stock a couple points ago. That helps as well. The volatility is also not that low. Now, ladies and gentlemen, boys and girls, we have to understand something. When these moving averages, if we start to see trend 5, if we start to see, let's say, the red box there on the whole moving averages and you own shares, this is when the investors start to transition to defense. Defense, protecting, trying to get the delta down. The other thing is when we have, let's say, green box on trend, green box on whole moving average, this is not when we're thinking about defense. This is where we're thinking about offense. Higher delta, get that stock to move, okay? Because we have a dollar for dollar exposure, okay? Now what I'm going to do is on this position is I'm going to click on the bid of that call, the 50. We're going to now sell the call, try to get 204, try to. And if we sell this, I'm going to put this right in the section of stocks. There's the credit, less the commission right there. Send the order. All right. Now, so now what you're see is if we go back to the monitor, notice also a commission of 65 cents. We have the shares. We have sell. There it is. The 50. And we've now turned this into a cover call. So if the stock goes further and further and further down, well, we're trying to give back less on the shares and trying to get some gain back from the call. As the stock price drops, the calls typically will depreciate, assuming volatility stays the same. If we want to see a little example of this, let's go and see if I have one in this account. Let me just double check. Not there. But let me check in the IRA. What would this look like just real quick if I have one? Okay, here it is. In the IRA, we do have an example of this on the same stock. 100 shares of stock there, sold the call. So when we're looking at the profit loss of the call, well, what did we sell the call for? Answer, $1.67. What is the call worth now? Well, 17 cents. So now if we actually click on this, we did this on June 16th, about what, a month ago? And the stock ran up and it pulled back. And now the call is cheaper to buy back than what it was at that time. Now, what could we do? Well, with the July expiration there, let's roll the call. If we think that price might continue to pull back or oil might go up higher, we're going to right click on that. We're going to say create a rolling order. Rolling order just means that we're buying back the one that we have now and then just selling another one. Now, if we do that, create a rolling order there. Now you're seeing that we're buying that one back there, the July 50. And now we're asking ourselves, well, geez, could we go to the August? We already talked about that. Could we try to sell the 50 again? But now not for the July, but for the August. So what is this really doing? Well, this $1.49 that we make, it's theoretically lowering what we own the stock for, theoretically, okay? So if we bought those shares at $43.65, okay, $43.65 less $1.49, the new theoretical price that we own the stock for because we have a credit from that call, we could get that potentially. We'll see if it fills. $42.16. Okay. So now what I'm going to do is I'm going to come back and we're going to roll that. And we always say if you can roll for a credit, consider, right? Confirm send. Note the commission there. Buying the call back and then selling the call. That's why $1.30. Send it. Okay. Now, was it a missed opportunity? Are we a little late? Of course we're a little late. The number of days with the moving averages have been read for days. So that kind of says that if we were managing this, the cover call probably could have been back here when those moving averages, one of them or both of them went red and the investor wanted to hold the position and they had 100 shares of stock. Now, let's also go back to kind of some new examples here. Okay, now if we pull this back, let me kind of bring this up and kind of talk about some different ones. I want to actually go back to a couple stocks. Let's go back to just real quick the stock of Dell. Okay, speaking of volatility, now here's the thing. When we just look at a stock, we don't really understand maybe sometimes how much it's really moving. The range of this price action, I'm just going to point to a candle. The candle that I'm pointing to, just one of them, we'll look at a couple. You're going to see right at the very tippy top, you're going to see where it says R for range. So whatever candle that I'm pointing to is tells us the range from low to high for that day. So I'm pointing to the date of June 1st. The range of that day is $43. So if you had 100 shares and maybe you got the direction wrong, man, it moves, okay? A high nominal dollar amount, but also a decent percentage as well. Now, if you go over here and look at this green candle, that was also a $43 move, 44. Look at this one, that's 22. That one right there is a $26 move. So it doesn't look like it's moving a whole lot, but when you look at the fluctuation from low to high, $16, if you bought a stock position and you got the timing maybe a little off, which you could say that we did too. We bought those shares, what, there or there? We got pushed down on. Now, how many of you have ever gotten in on what you thought was an entry signal, and maybe even it was, and you said, hey, I got in and the stock went down? Okay, now when did the paper money account get in? It got in on 7-9. So let's go back to this. Let's go back to the charts. 7-9, where was it? It was right there. Okay, so we were right there. So we took a breakout trade. The next 2 days, it goes down. Does it break the support level? No. Does it cause there to be an unrealized loss in the paper money portfolio? Yes. Did it feel good? No. This is called risking your economic capital to see if that trend could bounce. Now, today, we're like, man, where have you been my whole life? This is the move I thought that was going to happen. So today, 34 points, range 2197, almost an 8% move on the stock. Now, some investors say I have a position. Some investors say, look, this is why they made different strategies. The paper money account has shares already, but wonder if the investor wanted to overlay maybe options. Now, we don't know. We'd have to double check. Going to go to the trade tab. Going to pull up, let's say, just give me a couple strikes. Let me see what we have here. Are the strikes, the bid-ask spreads, are they tight? They're not tight, okay? So what you're now going to see is the spreads are pretty wide on that, $1.40. This one's probably the tightest there that we can see. That one's still about $1.20. It's pretty wide, okay, to say the least. Now, what I'm going to do, or at least let me just double check. I'm going to look at these other ones just real quick to see if there's any other ones that would be a little tighter. That's not, I'm just verifying. These are still pretty wide. That's $1.30 wide. Looking at these different expirations, okay, that's even wider. So this is really kind of more of a stock trade. The investor could look at the options, but normally this bid-ask spread on the strike that you're looking at, like to see something 20 cents or narrower. 40 cents maybe at the worst, okay? And even if we said at the worst, the only one that we could maybe look at the worst is the 450. Now, I'm going to show this. This is probably even maybe 50 cents, and it's moved on us, okay? If we decided, hey, we're going to sell the 450, okay, and what I'm going to do here is buy the 440. Now, this is probably going to be it depends on what the fill is. If we decided that we were going to overlay a short put vertical on the shares, trade number one, selling the 450, thinking the price could stay above that, buying the 440 below for protection. So the only reason, well, one of the main reasons why we're buying the 440 is downside protection. The second reason is to offset to make it where there's built-in maximum loss. And the biggest thing is when we look at confirm and send, you're now going to see that the credit of the trade is $5. Okay, now excuse me, $4.90. Now it moved a little bit on us, so let me confirm send. There it is. So now if we look at the credit, $4.85, max profit, $485. Okay, and if we look at the break even, $445.15. Max loss, $10 strike width, less, okay, the credit. And now you're going to see the max loss, $5.15. Note the commission. Now, when you look at this, we want to make sure that we're getting the mid price. Now, does that mean it's going to fill right away? It might not. We're trying to make sure that we're getting something. We like 40 cents, worst, might even be a dime more. However, when you look at what the credit is to the risk, it's more of a dollar for dollar, which tells us we might be more at the money, and we are. The second thing, it also tells us something about the volatility. It's higher, hence the bigger credit. The bigger credit doesn't mean it's bigger, okay? Better, I should say. It just means in this case, there could be more risk or is more risk. Now, if we go back to send, okay? Now, if you look at this, what you're going to now notice is if we go back to weekly chart, okay, so we have shares. Second thing we actually, could you believe Dell did this? I mean, if you're an Apple user, you're just scratching your head right now going, Now, speaking of Apple, I'm not going to talk about Apple in detail, so it fills at 490. The one thing I'm just going to, we'll take a quick peek at Apple. Apple again went to 323 yesterday. Earnings coming up actually on 730. Okay. Now, I do want to go back to kind of two stocks that we're going to keep an eye on. Okay. So, number one is I'm going to come back to CrowdStrike cyber security. Now, we cannot act like this is a new idea. Okay. We talked about this. Okay. Cyber security. When you think cyber security, you think of probably two stocks, CrowdStrike and Fortinet. Okay. Fortinet has just been grinding to the upside. But if we looked at, let's say, CrowdStrike, let's say the investor said, look, I think you could kind of look at the pattern and say, is this maybe a little cup and handle? It's not maybe perfectly balanced, if you will. Okay. Kind of has a little bit more of an upward bottom there. Same idea though. Now remember, this is your down day, the red candle. This is your close higher day, okay? And this morning, CH, close higher. There's your gap entry. Okay, now, does every time a stock gaps is a gap and just run? Absolutely not. Sometimes, though, you're like, it did, okay? Now, if you take a look at this, we don't have upcoming earnings, did have a 4-for-1 stock split. And if we actually go back to this, what I'm going to do is let's kind of look and see if there's any potential here. Now, liquidity. Now, notice on this one, if we just look at the at-the-money put and the at-the-money call, it's about 50 cents wide, right? So 50 cents, if we got somewhere in the middle, maybe it's about a quarter, okay? Now, if the investor decided, now this one right here, are they all equally liquid? No, 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 no. Okay. Now, the one that kind of has a little bit tighter bid-ask spread will bring up, let's say in this case, the basic price and quote, go to open interest. Which one has the highest? It's really that one. And that's what's kind of interesting on that one is it doesn't have the tighter bid-ask spread. At least we could pull up the volume. But this one right here is the one that has a tighter bid-ask spread and the prices are moving on us. Now, if the investor said, James, I kind of want to do more of a call vertical, a long call vertical. Well, let's say the investor decided to come over here to the call side where there does look to be a little bit more liquidity. If we decide in this case to go look at maybe the 200, the 205, 60 cents, try to get something in the middle, 30 cents, right click on the 200, buy, go down to the vertical. Now remember, and we'll show an example, past trade so we can kind of see what this looks like. What do we really want the stock to do? Well, we want the stock to close above both strikes. Okay, you close above both strikes, the debit represents what we could lose given the vertical. And the difference, you get a $5 wide spread, less the debit, the max gain there, 247. So these verticals, long call verticals, long put verticals, typically about $1, 1-to-1 reward risk ratio. You take a look at that, notice the commission. Again, what do you really want the position to do? Close above both strikes or stay above it. Okay. What's the break-even expiration? 202.53. Where are we at now? 206.61. So we could go down $4, which is not that much, but that's the break-even. The key words are at the expiration. Now, what does this really look like? Let's kind of look and see if we have one of those in the paper money account. Speaking of that, we have American Express, just to kind of show a past example on, long call at 330, short call at 340. Now, 3 days remaining. Well, if we have 3 days remaining, what do we want the stock to do? It's what we just said, right? We want the current stock price to be above both strikes. Now, here's where we can get a little greedy, okay? I just want more. Now, you could go and see what the max gain is. This is for one contract, okay? Now, if we looked at this, if we paid $15.25, we collected $9.85, the debit was $5.40. Okay, so that was the debit. That's what the investor could lose given the vertical. Paid $15.25, collected $9.85. We can see that right here. That's the debit. Spread width was 10. So if we actually go back and say, look, spread 10, debit 540, the maximum gain given the vertical is 460. Well, when we come down to this position, how much does it say we're up? It shows us 510. But really, we can't be at 510 because the max gain is 460. Why is that off a little bit? It's because of the spreads. They've widened out. We're pretty much at a maximum gain. We're going to right click on this, create closing order, and say sell the vertical. Now wait, could the investor say, look, don't just sell it, roll it, okay? Well, let's close what we have first, try to grab that, sell that, and then now we're going to come down to the mid price, okay? Mid price 967. Again, just because we put the order in doesn't mean it's going to fill immediately. We have to see if it fills. Confirm and send, note the commission, and send the order. Now, one of the biggest things about long call verticals is we could take sometimes higher price dollar stocks that many investors might say they're too expensive. Use options to try to get a portion of the move. Why did you say portion? Well, if we bought shares of stock, that's not the same as a long call vertical. Okay, so this is where the leverage comes in, right? Now, speaking of the AXP, I'm not going to, for example, now if we said in this case, could we do a new long call vertical? We could. The earnings is coming up in about 10 days. I'm going to look and see if we can't put maybe this towards maybe another one of the cards that might have maybe a little bit stronger trend. Visa's been up there. MasterCard, still pretty strong. Capital One definitely has lagged. DFS lagged for sure. I'm going to hold off on the cards, maybe in favor of the commercial banks. Now, speaking of this, why are we bringing this up? Well, because if we look at, let's say, the financial sector, okay, let's pull that up so we can see that again. The IXM, we saw that before. That was the one where the sector actually hit a brand new high here today. Now, I'm going to come back to kind of the next stage and just look at this. Now, one that we're going to keep our eye on is WFC. WFC had earnings today. The estimate was 172 today. The actual was $2. Okay, so beat it pretty good, okay? Now, the thinking is there, if they actually, now, by the way, that was the highest earnings they've actually had in the last, 5 quarters? You had $1.60, $1.62, $1.66, $1.60. So pretty good quarter actually from Wells Fargo. Didn't just marginally beat it pretty good, okay, by 38 cents. Now, we're going to keep an eye on that. Today's kind of in that earnings day. Now, if I went back to the other one, which is Morgan Stanley, that is the one if we come back and say, when does that actually have earnings? That's going to be tomorrow morning. Goldman Sachs actually here. Same thing. Estimate was 1447. Actual is 2098. Okay, so they're not. Now, here's what's kind of interesting. What happens on some of these Wall Street banks or commercial banks? That's not necessarily showing per se what happened in, let's say, Main Street per se. Maybe people that don't invest at all. I mean, that's what we have to understand, okay? So they're not only using, let's say, getting deposits, they're actually taking some of those deposits and using that as trading for themselves, okay? Now, what I'm going to do is I'm going to look to see if we can, on something, let's say, like Goldman Sachs, I'm going to look and see, well, what do we have here if we can? not everything is going to have tight bid-ask spreads. On a day like today, the spreads might be wider, okay, given the volatility, and they are, okay? If we go down and say, what about the September? And I'm looking at the first at the money and the at the money on the put side, wider spreads. So this one is kind of really more of like maybe a stock-like example. Now, with the big gap that we actually had, we're not going to try to chase it per se. Let's go back to that moving average envelope candle chart. If we looked at this, okay, we went to the white line. The white line represents 7% above the 10-day moving average depicted in that light blue color. So if we said, you know what, James, I'm going to try to buy maybe right near the red moving average, 5% above. Well, if we did that in that case, I'm going to kind of right click on the chart. I'm going to go down to buy custom, and we're going to go with OCO bracket. Now, if you were watching this and said, well, are we doing an option or a stock? Well, we're doing a stock position, okay? If we're buying and selling off the chart, it is a stock position. I'm going to right click on it with OCO bracket. I'm now going to actually widen this out a little bit. I'm actually going to now put this right here at a limit price. So where I right clicked on the chart was 1109.18. That's where I right clicked. If we're trying to do a buy limit, this price or less, okay, this price or less, limit GTC, okay. Now that's saying buy at that price or less. It might not fill. We're going to have to see if it can fill. Second, when we talk about the stop, if we talk about where this little breakout area was, it was probably right around the area, let's say 1057. 1057 less 2%, it's going to give us 1035. Okay? 1035 and change. What do we got? 1035.86. Now, we got a question from Chris regarding DFS. Is that Discover Financial still trading? Let's double check. Let's see if we had the right ticker symbol. Now, I still got that. Chris, let me just go back and double check for you as you're asking in the chat. I'm just, so that is showing 714. Okay. Double check me. Is everyone getting that? I looked it up. Okay. Double check me on that. Let me know. Yeah. We'll have to watch, have to look and kind of see, did that ticker symbol change? Double check. Yeah. So for some reason, yeah, it's wide, no volume. So let me just now let's double check. Discover. It still shows. That's kind of interesting. Okay. Yeah, that one's, so we're not going to trade that one anyway, but that one is not, it's not pulling up and yeah, it doesn't load. Okay. So I don't know if they changed their symbol or what, but when we look at that, we got volume, nothing. Okay. So let me do some research right after this. Now, if we pull this up just real quick, target wise, okay, when we have this prior high, okay, when we have this prior high and I go back to GS, we're kind of thinking about that extension, right? Yeah, so Discover was bought out by COF. Thank you for that. COF, okay, is now the ticker symbol. The double check and see when they combined. Okay, thank you for that update. And now what you're going to see is if you look at this, we're just going to kind of draw the extension. Where was the prior high? Where do we fall down to? Drawing body to body. And now we get these 2 points of A, 1187, or second, 1229, or third, 1298. Okay. Now, if we pull this up just real quick, I'm going to put down the first area, 1187. Okay. So now what I'm going to do is if I'm going to go dated GTC, good till canceled, good till canceled. Okay. So we're going to buy the shares of the stock at a limit price, this price or less. If it gets filled, target, stop underneath. Okay. Now let's go back to something just real quick and let's show this. What other trades were filled today? Well, number one is we did Dell, sold the put on it. Number two, we exited the American Express. We showed that example. Let's also go back to the IRA. I think we did one there as well. What we did there is we rolled the covered call on Love. And we also added that call in the margin account. And this last one we just did was Goldman Sachs looking for a bullish setup. So keep an eye on some of those financials. And also we did the example of CrowdStrike as well. I'm out of my time here today. Remember, coming up, we got Cameron May coming up for this next webcast. Let's go back to this for just a moment. If we come back to this, we can actually see, let's go to the live webcast. Here we are on the 14th, coming up with getting started with options. Barbara Armstrong, who is with us, is going to be teaching in just a little bit, getting started with technical analysis. That's at 2 p.m. Eastern. So make sure you actually have this link as well, that we can stay updated with what classes that we have taught, but also the schedule today and going forward. Today, we tried to focus on some examples that we had, given that expiration was this coming Friday. We also tried to talk about legging into calls, cover calls, rolling cover calls, verticals, and then also buying shares. These are probably some examples of what some investors might be doing on a day-to-day, week-to-week basis, as their portfolio is really centered around stocks. Now, with that example, stay tuned for actually Cameron May coming up next. Thanks to Barbara Armstrong, Mrs. Fleeg. And also remember that with what we talked about here today, it's done for example, illustrative purposes only. All investing involves risk. And remember, with what we talked about, they were examples. Go out and practice these examples of stocks, covered calls, verticals, to get more familiar with trading shorter term movement, but also trends in general. Thanks so much. I'll be back on tomorrow morning, same time, same station, with trading growth and value. Stay tuned for Cameron May coming up next. Bye-bye.